Hello, and thank you for joining us for this session. I'm Deepshikha Monga, an editor at DealStreetAsia, and with me are my colleagues from our research and analytics team. Valerie Law, Team Lead Research.
Hello, everyone.
And Andi Haswidi, Head of Asean Research.
Hi, everyone.
The DealStreetAsia Research and Analytics team provides you in-depth reports, at least 3 a month, on the markets we cover to provide you with the data and analysis you need as decision makers. Today in this session, we're going to talk about deal-making trends over the first 9 months of the year in Southeast Asia, as well as Greater China and India. Let's start with the highlights from Greater China and India. Valerie, how have these markets fared in the wake of the pandemic?
Overall, Greater China and India saw a healthy recovery in deal-making activities in the third quarter. Greater China saw deal-making activity recover after the threat of COVID-19 pandemic started receding in parts of the region. If we look at the funds raised, Q3 activity surpassed Q2 activity, and Q2 surpassed that of Q1. In fact, Chinese startups collected a combined 14.3 billion across 354 deals in the third quarter, a surge of almost 51% in funds raised, and a 33% increase in deal volume over Q2. Comparing with the same quarter last year, proceeds from this recent quarter are at least 45% higher than the 9.9 billion of venture financing recorded for China. The average deal size, if you see in the next slide, yes, also increased to 45.6 million versus 42 million in Q2, while the median deal size remains unchanged. Next. A similar story has unfolded in India, whereby the third quarter saw a rebound of deal activities after a lull period caused by pandemic-related lockdowns in the second quarter. The amount raised across 258 deals totaled at least 3.1 billion. This was supported by the bumper month of September, where 1.88 billion worth of deals were raised through 92 transactions. This is the highest amount raised in a single month for the year, the second highest being in February with 1.5 billion raised. While overall deal value in Q3 is more than double the deal value seen in Q2, it is only 78% of the deal value seen in Q1, signaling more room for recovery. In terms of deal count, Q3 also saw a 33% increase over the previous quarter. Average deal size more than halved in Q2 versus Q1, but it rebounded to 70% of the Q1 average deal size. We also found the dispersion in Q3 has been towards smaller deal sizes, signaling investors' interest in diversifying across smaller companies. In terms of sectors, unsurprisingly, the pandemic has put healthcare-related startups in the spotlight. In most of Asia, which we cover, healthcare-related startups backed funding throughout the year. In Q3, though, e-commerce platforms have been a favored sector in Greater China, grabbing 2.4 billion of funds collectively. There were 4 mega deals, 1 medium-sized deal worth 80 million, and 11 smaller-sized deals worth 14.8 million. In the next slide for India, fintech and e-commerce verticals shone in Q2, while agtech shone in Q3, bagging 1.1 billion, or around 1/3 the total capital raised for the quarter. In terms of deal volume, agtech dominated too, with Baiju, Eruditus, Unacademy, and Verdantu supporting with their mega rounds in this quarter. Over to you, Deepshikha.
Thanks, Valerie. Andi, how did Southeast Asia do? Is it following a similar trajectory as China and India?
Perhaps, but it's a delayed one for Southeast Asia. So we only entered the lockdown period around April for most markets in the region. So we did not see a negative impact from pandemic on deal making until the third quarter. So when actually deal count and deal value dropped. So overall, in the first 9 months, the total value is actually on par with the same period of last year. So this means that unicorns are raising less capital in 2020, while there are more investment going into seed and early stage startups as investors diversify their portfolio. And since we expect more slowdown in activity in the fourth quarter, so the total deal value for 2020 overall, I think will be either on par or lower than last year, which reached 8.8 billion with 500 deals overall. So on the next slide, you'll see how Singapore, I just want to highlight that Singapore is the only market that saw growth in both deal count and deal value in the third quarter. So this is a testament to the city-state's role as a financial hub, obviously, as well as the government's capacity to weather the economic crisis by way of fiscal response, as well as virus containment policies. So overall, I think Singaporean startups have benefited from these policies and likely to perform roughly better in their trajectory towards recovery. So deal activities in other markets, particularly in Vietnam and Indonesia, both are growth markets for investors and startups, were severely affected in the third quarter. But the narrative for both economies and Indonesia, especially in terms of the story of a middle class expansion, I think remains intact. So one evidence of this is the 250 million fundraising by Traveloka in the third quarter. As we know, travel industry is the most severely affected by the pandemic. But investors know Indonesia has a long way ahead, and the fundamentals are pretty much still intact. So the outlook, I think, remains attractive for investors. So the 250 million for Traveloka brought the overall tally for Indonesia relatively on par with the same period last year. As of the first 9 months. Beyond the numbers, we also saw a different kind of trend happening in the third quarter. So we saw health tech in terms of the number of deals. Actually, there were more deals going into health tech rather than e-commerce. As you know, in the past, e-commerce and fintech are two of the most, basically the top two sectors in the past quarters, years. But now, as expected, health tech during this pandemic is drawing more interest.
We've also seen this trend in fintech continue in Q4. The recent investment in Linkaja by Grab and others shows that this sector continues to remain very, very attractive, and in fact has become more attractive in the wake of COVID-19. And of course, lest we forget, Gojek's GoPay financial services unit backed the investment from Facebook and PayPal earlier this year. So there is, of course, some big deals happening in that space that continue to attract investors from all around.
Yes, that's very true. And we'll see more activity in 2021. But I mean, this activity will also be influenced by how banks are, basically adopting new technologies to make their services more accessible to the millennials, basically. And lest we forget, also when it comes to P2P fintech, the story is going to be slightly different. So we have seen P2P firms in Indonesia no longer in operation because of the pandemic, obviously. And we will see this even more so maybe next year in terms of companies going bankrupt and perhaps merger and acquisitions in 2021.
Thanks, Andi. Let's talk about the theme of the day, private equity. How have private equity funds, especially those focused on Southeast Asia, fared this year?
Okay, so this is based on our reporting mostly. 2020 has been challenging to say the least, but Southeast Asian PE firms continue to raise funds in 2020. Obviously, so far there have been four PE firms reach a final close for their funds with a total value of 1 billion. So I'm talking about Southeast Asia focused funds. It can be, PE firms that are based outside the region, but they have fund dedicated for the region. So on top of the final close, we also saw 6 funds reporting interim close as of November, with total value of 1 billion, which is equal with final close. So the 1 billion final close by PE firms actually compares with 1.8 billion funds raised by VC firms as of November. Why I raise this? Because there are a lot of similarities between Southeast Asia focused PE firms and VC firms in terms of their investment mandate and focus. So a lot are going into growth stage startups. It's also worthwhile to review what's going on, outside the region. So I'm talking about the APAC fund, Asia Pacific funds. So these are Asia-focused funds and Asia-Pacific-focused funds that include Southeast Asian markets as part of their investment mandate. So these APAC funds have so far secured, as of November, 14.8 billion in final close and 14.3 billion of interim close. I must say the latter, the interim close, is heavily skewed by KKR's 13 billion fundraise, which is still going on until now. So if you look to the right, you'll see that buyout capital dominates APAC funds, whereas for Southeast Asia funds, it's more towards growth capital. So I think you can see a different appetite of these funds basically. Just looking more closely at the numbers, fundraising momentum in Southeast Asia focused funds definitely slowed this year. As I said before, 4 funds secured final close with total value of 1 billion. So this compares with 7 funds with a total value of 1.8 last year. So having said that, interim close data does show us encouraging results. The impact of the pandemic is definitely more immediate for PE funds, as you can see. So maybe we are going to see recovery much faster. Okay, so what you're looking at here on this slide is the total tally for final close since January 2018. Again, as you can see, it is dominated by growth capital, and activities are also dominated by Singapore-based VCs. It's quite natural given the city-state's role as Southeast Asia's premier financial hub, I suppose. Even though Singapore is the most active, but if you look at individual firms, you can see that the Kuala Lumpur-based Creador is the only firm that managed to close 2 funds in the past 5 years. So the 565 million Creador 4, and which was closed in 2019, and the 415 million Creador 3 closed in 2016. So yeah, the final slide from me is the number of Southeast Asia focused funds that are currently in the market. They're aiming to raise 7.7 billion. Roughly 3 billion have been secured so far. So still a long way to go to reach the target. You can check the full list of these open funds in a report that we are distributing for free to all attendees.
Thanks, Andi. So far, we've talked about what's happened this year, but what's the outlook for the months ahead? Let's start with Southeast Asia. Andi, do you want to take that?
Sure. So in terms of deal making, has been said many times over, investors have enough dry powder to invest in Southeast Asia, and businesses that benefited from faster digitalization during the pandemic, namely edtech, headtech, will continue to secure deals, I suppose. This also goes into businesses that focuses on tech enablers, those that are focusing on machine learning, AI. We'll see more of that. I mean, more new companies and more investment. And 2021 will also be a year of measured recovery, I should say, for sectors that have been severely affected, as I mentioned before, such as travel and hospitality. But the recovery will be driven by mostly by domestic consumption. So the path to recovery will differ across markets. I mean, this is Southeast Asia, right? Different governments, different characteristics. But government policy does matter, I think. So recovery should be relatively faster in Singapore and Vietnam, perhaps a little slower in Indonesia. But given Indonesia's massive size, any slight recovery should mean a lot to local businesses. And among Southeast Asian countries, I'm more concerned about Philippines. So analysts were surprised to see how much the pandemic had affected Philippines. But we actually saw this coming back in May and June when we were working on our travel tech report. We realized the massive contribution of travel and tourism to Philippines economy, even though it is largely driven by domestic travelers and tourists, so totally different from Thailand. But the contribution to GDP is actually larger than Thailand. So yeah, Philippines is suffering from that, and also lower transfers from for BPO sector. So yeah, that's basically it. Maybe Valerie can share some more on China and India.
Sure.
Yeah.
Valerie, can you talk about Greater China and India?
Yeah, next slide, please. So with the momentum we are seeing in the last quarter, we believe that Q4 deal activity for Greater China would finish the year strongly. In October, we saw total funds raised by companies touch a new high with an 18% month-on-month growth. This is a strong start for the quarter. The momentum is in line with the MasterCard Caixin BVD New Economy Index shown in the next slide. This tracks the size and changes in China's nascent industries. October came in at 29.5, meaning new economy industries accounted for 29.5% of China's overall economic input activities, up from 28.9 in the previous month. Next slide, for India. The Indian economy, which has been severely hit by the coronavirus pandemic, is projected to contract by a massive 10.3% this year, according to IMF's recent forecast. We have also seen deal activity slow down in October after a record bumper month of September, which saw several mega deals. Next year, though, India is likely to bounce back strongly, with IMF forecasting an impressive 8.8% growth, surpassing China's projected growth rate of 8.2%. Moving on to the themes we should watch in the next year. Obviously, the first theme would be health tech. Well, health tech usage has grown by 4 times and retained users post-lockdown, based on the Google Temasek 2020 report. Based on our own research, Singapore is the most fertile market in the region for telemedicine startups. As of the publication of our telemedicine report, the city-state is home to at least 26 companies that provide teleconsultations, of which 9 have raised at least 68.7 million of funding in total. The largest consumer market in the region is, of course, Indonesia, home to 19 telemedicine startups. At least 5 of these have raised a funding total of 123.4 million. The next theme to watch would be e-wallets. They would be fighting it out in Southeast Asia. In June, where we published our e-wallet report covering Southeast Asia, we predicted that the 1.1 trillion of gross transaction value for digital payments in the Economy C 2019 report was a tad too conservative. In the latest Economy C report, they have upgraded total gross transaction value to double to 1.2 trillion in 2025. This is revised from 1.1 trillion previously projected, giving us a clue about how big and how fast the pie is growing. With that, it is no wonder that dominant e-wallets in the region are in a hurry to grab as much market share as possible. There is also a pending merger between Dana and Ovo, while Grab has recently made a $100 million investment in LinkAja. All these headlines point to a hard battle ahead, as most people we spoke to in the region only has 2 to 3 e-wallets stored on their phones. Then lastly, it is the EdTech. Well, EdTech has been gaining momentum with funding tripling in 2019. Indonesian startup Rangguru raised 150 million in December 2019, one of the largest rounds for a Southeast Asia EdTech company for last year. This year, we saw quite a good number of seed deals in the EdTech space for Southeast Asia, with notable ones being Lingo Ace that raised 7 million in June, and Manable that raised 5 million in April. 2021 could see some of these startups move to bigger rounds as they move beyond simple methodologies of online learning to integrate learning methodologies involving gaming, multimedia, and student progress tracking. Back to you, Deepshikha.
Thanks, Valerie. That brings us to a wrap. Thank you so much, Andi and Valerie, for your insights. Thank you so much for all that joined us. We hope you have a fantastic day at the summit and you find it useful. Thank you.
Thank you, everyone.
Have a great day.